Hello guys, I'm Paris the Options Guy and welcome back to the No BS Trading Podcast. This is episode number 19 and welcome back I said welcome back twice, but anyways, what are we going to talk about today? First of all, we are going to talk about what did Mr. Shaktikanta Das or the RBI governor said in the interest rate decision that was taken in the previous week on Wednesday, and then we are also going to talk about how the inflation might be coming back and the Fed's 50 basis point rate cut that happened a few days ago could be a big mistake. And then we are also going to talk about the biggest ever IPO to hit in the Indian IPO market ever, and that is the Hyundai Motors IPO. And should you take part in the action or should you stay on the sideline? Basically, should you apply or should you not apply to the IPO? And then I'm also going to talk about a few more other important things that you should keep in mind for the next week. But yeah, without any further delay, let's just start with the episode. So first, let's talk about what happened in the previous week, starting off with RBI, because on Wednesday we had the RBI interest rate decision and they kept the rates unchanged. They didn't make any changes in the rates, in any kind of rates, but what they changed was their monetary policy stance. And what they changed was they actually had a stance of withdrawal of accommodation and they changed it to neutral. Now what does that mean? I'm going to tell you in just a second, but those were the two, actually that was the only big change that came in the RBI meeting. And other than that, we just had some small changes like changes in the UPI limits and some warning to NBFCs on how they gave out loans and all that stuff. It was not important. The only big change was that they changed their monetary policy stance. So they changed it from withdrawal of accommodation to neutral. Now what does withdrawal of accommodation mean is that they are withdrawing liquidity from the system. When they say when the stance was in withdrawal of accommodation, right? And now they changed it to neutral. That means now they are not adding liquidity to the system, or they are not even withdrawing liquidity from the system. Now why was this a good thing is because if the liquidity from the system is now finally not going to be pulled down, that means the banks have more liquidity. That means the banks can borrow more from the market, from the whole financial system, which is a good thing because banks were already facing some issues with deposit growth and not having enough money to lend out, right? So this was a good thing, and because of which, if you would have seen that bank nifty just rocketed, right? But in the second half, bank nifty did again come back down. We are not going to go into the technical stuff and how the market reacted. Basically, this is a good thing for banks, but not in a very short term, but in a few months of time, definitely you will see that banks are facing a bit less strain on their basically deposits or overall their financial strength. But yeah, aside from that, no big changes in the RBI policy. However, I think in the next meeting we could probably see a rate cut coming, but that again depends on what happens between the next meeting and now. So anything that can put an impact on RBI's decision for the next meeting, I will definitely cover it on the podcast. But as of now, nothing really important which needs to be covered. But aside from that, let's move on to what happened afterwards on Thursday, where we had the US CPI. And the CPI numbers didn't come out great. Even though the markets didn't really react very badly, CPI numbers didn't come out great. So I'm going to tell you what exactly those numbers were. The expectations for CPI to come out on a year over year basis were at 2.3%. So inflation was expected, consumer CPI inflation was expected to come out at 2.3%, but it came out at 2.4%. So you would say, okay, still, as compared to the previous reading from the last month, CPI is still down 0.1%. So there is some, you can say some progress, right? But what was more concerning is the core CPI numbers, where core CPI actually came out at 3.3% with expectations at 3.2, with expectation at 3.2%, right? And you have to understand that core CPI has actually started rising as compared to the previous reading, because last month core CPI came out at 3.2% and this month it has came out at 3.3%. So inflation has sort of stalled. The progress for inflation to come down to Fed's target of 2.2%, basically 2%, has stalled. And this is not a good thing for the market, for basically Fed, because the Fed just gave us a major 50 basis point cut. So you have to ask yourself, was the Fed's 50 basis point cut really a big problem for the markets? Because if you see, inflation, the progress for inflation is stalled, and if the Fed has started to cut rates, could that mean that the inflation could spark again? And if that happens, you probably will even see that the Fed will start to raise rates again. So this is not a very good sign. Again, this is just the first month where core CPI has risen as compared to fallen, but still, just the fact that the CPI is not going down very fast is a problem, because the economic data is showing us that things have already started to slow down, but CPI has now stopped slowing down, which is, again, as I said, a bit of a problem. If this continues for too long, you will not see very good reactions in the market. Sure, the market didn't really react right now, but in the coming few months, the reaction will not be as good as it was right now. So I hope you understand that. And then on Friday, we had the PPI data, producers price index data. Basically, the inflation, the wholesale inflation, you can say, the inflation for the producers, for you can say raw materials and all that stuff, right? And PPI came out at 1.8%. Expectations were that it would come out at 1.6%. PPI again disappointing, and the 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 PPI numbers were actually even much worse as compared to CPI numbers, given the fact that PPI has come out on every, in each, you can say, on each metric, the PPI numbers have come out bad. Even core PPI coming out at 2.8% with expectations at 2.7%. So not a good thing at all. So inflation progress is stalling, and the Fed just cut rates by 50 basis points. This is not a good sign, because now the Fed might be forced to not do more rate cuts in the future anytime soon, or the Fed might be even forced to hike rates if inflation starts to rise again. Now, one thing you should keep in mind is that the bond market actually already had factored this in, that the inflation might spark again, and we might not see such high number of rate cuts that everybody is expecting in the coming months. Because if you see if you see the 10-year yield, right, the 10-year yield started increasing from the exact day that the Fed cut rates by 50 basis points. That was 18th September. If you see, from 18th September itself, the 10-year yield made a bottom on 17th September, and from 18th September onwards, 10-year yields have continued to move up. Now, if you are watching, if you are listening to the podcast, just listening and not watching, what I want you to do is that start watching the video of the podcast, because I'll show you the chart right now. And if you see, exactly on 17th September, the 10-year yield made a low, and then it started to move up. Now, what does this mean, right? What does the 10-year yield increasing mean? Is that people were expecting more rate cuts from the market, right? Before you can say, before the yield started rising. Now, if the yields are rising, that means people are not expecting more number of rate cuts, or the expectation of the amount of rate cuts that we'll get in the coming future have gone down. So again, as I say, that the bond market never lies. The bond market most of the time gets things right, and the bond market is telling us that maybe we might not get so high amount of rate cuts that everybody is expecting. 125 basis points is like what everybody is expecting in the coming few months, but maybe might not get so high amount of rate cuts in the coming few months. So this is a problematic thing, and I'll definitely keep you guys on track in the podcast. But yes, after that, we had a few more changes. which was that the NSE has finally put out a formal circular saying that they will be stopping Bank Nifty, Fin Nifty, and Mid Cap Nifty expiries. As I said in the previous episode, also that mostly NSE will stop these three indices only for their weekly expiry, because Nifty is their biggest cash cow, right? Nifty options are their biggest cash cow, so they would not want to let that go, and they are stopping it. And where I was wrong is that I said that in December is where you would see the final expiries for these final weekly expiries for these indices, but I was wrong over there. And the final weekly expiry for all of these indices will be as follows. For Bank Nifty, it will be 13 November. So 13 November will be the last weekly expiry. So if you really like Bank Nifty like me, well, 13 November will be a very sad day for all of us Bank Nifty gamblers out there. But yes, then for Fin Nifty, it will be November 18th, and for Mid Cap Nifty, it will be November 19th. Exactly one day before the SEBI's deadline of 20th November. What I had thought was that they would continue to introduce weekly expiries until November 20th, and after that they won't. But actually, they will not even introduce, but they will completely shut weekly expiries before November 20th in Bank Nifty, Fin Nifty, and Mid Cap Nifty. Nifty will still have its weekly expiry, no problem in that. But yes, sad thing for me, because I am a Bank Nifty weekly expiry trader, but can't do anything. You have to adapt. Probably I will start trading in Nifty and start understanding how Nifty's price action is different from Bank Nifty. But that is out of the way now. Let's move on and talk about what is going to happen in the next week in the markets, and what are the major events or the major things that are going to happen, which you should definitely keep an eye out for. Now, next week on Monday, we have the Reliance Industries results. Now, I'm not going to speculate and say that, definitely Reliance's results should come like this, should come like that. I'm not going to give you estimates. What I am going to say is that if you are trading in Nifty, please beware. Okay, now sometimes Reliance's results come out in the market hours itself, and sometimes they come out after market hours. Most of the time they come in the market hours itself. So if you are trading in Nifty, please be a bit aware, right, of this. If you are trading in Nifty and you are a bit concerned about your positions, what I would recommend is that by 1 p.m. close your positions, and then don't continue to trade, because mostly what happens is that Reliance's results come out after 1 p.m. only. They don't come out before 1 p.m. I've never seen that happen. So that's why I would say is that don't trade after 1 p.m. in Nifty. Wait for one day, then trade afterwards. But yes, after that on Thursday, we have the retail sales data from the US, and retail sales are expected to come out at 0.3% on a month-over-month basis. That means as compared to the previous month, retail sales are expected to grow by 0.3%, and core retail sales. Now, what are core retail sales? Core retail sales are basically retail sales excluding the automobile sales. So what core retail sales is, that it focuses a bit more on essential items. Now, automobile purchases are not essential for your life. Like, you cannot not live without it's not that you cannot live without buying automobiles, right, or driving a car or whatever, right? You can, right? So core retail sales are basically a bit more retail sales of essential items, right? Now again, there are many other things that are not essential, just like automobiles, but still, I hope you get the point. And core retail sales are expected to come out at 0.1%. So if these data points come out hotter than expected or more than expected, now core retail sales, as I said, that they are going to come out at 0.3%. If they come out at 0.5% or 0.4%, market will not react better. It will react badly, because the market is expecting that the economy will slow down. That's why Fed has cut rates by 50 basis points. If these sales data come out more hotter than expected, by hotter I mean more than the estimated numbers, then what happens is that the Fed does not get to cut rates, because the Fed will only cut rates when they see more weakness in the economy. If they are seeing that the inflation is not going down, the retail sales are coming higher than expected, that means the economy is not slowing down, right? And so they don't get to cut rates, which will be bad for the markets, bad for stocks. So keep that in mind. And then on Friday, now this is not an important news, but I would still want you to keep this in, you can say, check. If you are investing in China, especially China has their GDP numbers, and it is expected that China's GDP will come out at 4.6% for their basically second quarter of the year. Okay, now if you are invested in China, then this is very important for you, because as I said that China, there is a lot of FOMO going on in investing in China, right? So if GDP numbers come out bad, that FOMO can turn against you, and you can see very bad sell-off and a loss on your investments also. If you've recently invested in China, like very recently in the last couple of days, you can say, or in the last few days, then this will be a very bad thing for you. So keep this in mind. If the GDP numbers come out good, you will see a bit more up move. But as I've said in my latest article on LinkedIn, that China, you should not invest in China. Okay, if you are invested in China, book out your profits, but you should not stay invested in China. And there are many reasons which I've talked in my LinkedIn article. You can go to LinkedIn and check out that article. I will also put a link in the description. But what I want you to understand is that if you are invested in China, you should not stay there for very long. It is better to book your profits. But aside from that also, as I said, that China's GDP numbers, even if they come out good, even if they come out bad in the next, you can say, the view going forward for me at least is not that good. I don't think China's market will sustain this rally, and we can very well see a very deep correction in the Chinese markets again. But don't believe me, just look what happens in the coming few days. Okay, but yes, I will still keep the link in the description if you want to read the article, if you still haven't read the article. But yes, moving forward, what is going to happen in our markets is that on Friday we have the HDFC Bank results. So for all my bank nifty players now, this is a very important thing, because HDFC Bank, even if it like brings out slightly bad results, a lot of people, not a lot of people, but actually Bank Nifty starts to react very violently. Okay, I still remember when HDFC Bank 2 quarters ago released very bad result, not very bad, but still bad results, and I was carrying a put short, and that was like hell for me. But yes, we'll not go there. But yes, keep this in mind. HDFC Bank results will come out on Friday after market. That means if you are carrying overnight positions, that is a big risk for you. Even if you are carrying overnight positions, please carry them with a very good hedge, or else don't carry them, because HDFC Bank, as I said, sometimes likes to go crazy and just sometimes opens with very big gap ups or gap downs. So please don't take the risk if you are a risk averse option trader, or even a futures trader for that matter. Okay, so I hope you guys understand that. But those are all the events that you need to keep in mind for the next week. But now let's move on to the IPOs, because because next week is a very big week for the IPO markets in India. Now, talking about the IPOs that are coming in our markets next week, and there is only one IPO, but it's the mother of all IPOs, and that is the Hyundai Motors India IPO. Why? Because it is the biggest ever IPO to hit the Indian markets. It is going to be the biggest ever IPO, with the IPO size being 27,870 crores. Now, for a bit of a perspective, I'm going to give you, the biggest ever IPO to hit our markets was the LIC IPO. The LIC, when LIC released an IPO, it was only at 21,000 crores. So Hyundai, by a very big margin, is going to be the biggest ever IPO to be launched in Indian markets. And this IPO is going to open on October 15th and it is going to close on October 17th. So the chances of you getting this IPO are very high. Okay, keep this in mind. It is going to be very high because even if you apply from the retail category, for the retail category itself, the issue basically 8,700, around about, I think 8,700 crores worth of shares are only left for the retail category. So for retailers to fill that much is going to be a big task. Now, I know that a lot of people will be interested who are not, frequently applying for IPOs and all that stuff. They will also be interested, but still filling up 8,700 crores is not a small deal at all. And so that's why you have very, very good chances of this IPO getting allotted to you. Okay. But here's the sad deal for the people who are applying for the listing gains, who look at all those very good listing gains, 100%, 70-80%, sometimes 150%, all that stuff. The problem with this IPO is that, sure, this might be your first IPO which you get allotted, right? This might be the first IPO which you get, but the gray market premium is just 3.8% right now. Is near 4-5%. So what's the point of getting the IPO, right? You would think to yourself, like, sure, I'm going to get the IPO, but like, am I really going to apply to this IPO for just 4-5%? Do you want that? So this is the problem with this IPO, is that the gray market premium is complete trash. So for all you people out there who are applying, who apply to IPOs for the gray market, looking at the gray market premium, sad to say, this is not the IPOs that you should apply for. And even in the coming days, I don't think the gray market premium will rise at all. Probably it might rise to like 6, 7, 8, 9, 10%, 15%, but not more than that. Even in that scenario, it is a complete trash buy in my opinion. So I'm sorry. So just in case, miraculously, if the gray market premium goes above 40% by the end day, then you can apply to it. But I don't think that will happen, because again, this IPO size is a very big IPO, 27,870 crores. So it is very hard to move the gray market premium by such a big number. So that is out of the way. Now let's move on to, should you apply to this IPO for investment purposes? Should you apply to this IPO for investment purposes? The simple answer is yes. But now let's move on to a bit of a deep dive, not deep dive, but a bit of a dive into the financials and what the company does. Now, as you know already, that the company makes cars. Hyundai Motors is a very big name in the global car market itself, not just India. It is a very big name all over the world. So you are getting a very reliable brand. Okay, keep this in mind. Hyundai Motors is a very reliable brand. Okay, and Hyundai Motors India is a part of the Hyundai Motors Group, which is basically the global group, and it is originated from Japan. So Hyundai Motors Group is a Japanese group. So basically, it is originated from Japan, and Hyundai Motors India is a part of that group. Now, what is happening is that all of these 27,870 crore shares are being sold by the promoter, that is Hyundai Motors Group. Okay, so no new shares, no fresh capital going into the company. That is a bummer, but you have to understand that sometimes big companies will do that when they are maybe needing cash to do something else, right? So they will divest a little bit of their money from their subsidiary companies or daughter companies and invest that somewhere else. So looks like Hyundai Motors India, Hyundai Motors Group, the global group, needs a little bit of cash, and so they've decided to divest around about, I think around about 20% of their stake in the company, for 27,870 crores. But now let's move on. As I said that this company makes cars. It is the second largest OEM original equipment manufacturing company in the world. Okay. Second or third, I'm really sorry, I actually forgot. I think it was second in India and the third largest in the world. Okay. And so this company has already a very good base of business. It has a very good, you can say, foothold in the auto market over all over the world also, but specifically in India also. Hyundai is a very, you can say, a very reputed name in India. All with major names like Creta, right? Go into any city and you will see like 5 10 Cretas in the next 20 30 minutes, right? And you also have other cars like, Verna is one of the um, Verna is one of the cars that I've seen quite a few. And then you also have the I line, right? I-10, I-20 and all that stuff, um, which is a good which is again a very reputed, you can say, line, not reputed but a popular line. So that is fine, but what about the company's future plans? Right now the company is planning major expansion in India also, to export their cars after making them in India. And they are also a good way into innovation. They have a lot of innovative capabilities, and I've seen that with the Ionic line. If you don't know what Hyundai Ionic line is, basically it is their line for their EV cars. Okay. And if you see the Ionic 5, just type Ionic 5, right? And the latest version, if you see, they've made some very good innovations in that car. So in my opinion, they are very good on the innovation front too. They know how to keep up with the market, keep up with the changes that are coming in the auto market, in the whole car industry, and what are the changes. I think they can definitely cope up with that. And I think what I think is that, structurally also in India, the wave of scooters that was going on since the last, that has been going on even right now, that every household has a scooter. I think now that is going to shift on to now having every household having a car. And that is where Hyundai can really excel into. Sure, they don't have like completely entry level car models like Maruti Suzuki has, but still they have a good deal of, like, you can say, like close to entry level models which can appeal to the Indian households. So in my opinion, the company's future is pretty bright. Now talking about the revenues also, if you see, they've had a very very good upmove, I'm sorry, very very good growth in the revenues also, where in FY22 they had a revenue of 47,900 crores. In FY23 it became 61,400 crores, and in FY24 it went to 71,000 crores. So a good uptick in the revenues also, and at the same time profit after tax also going up much faster than revenues, where if you see, in FY22 profit after tax being at 2,900 crores, in FY23 it going to 4,700 crores, and in FY24 it going to 6,060 crores. So even at the same time, so revenues and net worth, sorry, not net worth, revenues and profits, both of them growing at a good pace, with profits growing at a faster pace. This tells you that they are improving their supply chain, their production capabilities, because of which this is aiding their net profit margins. This is a very good thing. And I think the expansion plans that they are planning for, the plans that they have to expand their manufacturing capacity in India, I think that is going to help this even more. And because of which they are going to see a much they are going to continue to see improvement in net profit margins, basically how much profit they make after cutting out all the expenses and tax and all that stuff. Okay, so should you apply to this IPO for investing purposes? Yes. For the long term, this company is very good. I think you should definitely apply to this IPO. But for the listing gains, as I said, too sad that the IPO which you will have the highest chance of getting is not having very good listing gains. But maybe this might be another case like Ola Electric, where the IPO opens flat and then just goes on for a rally of 100% or something. I wouldn't take that risk, but if you want to, you can. And if the IPO starts to come down, if the stock is down 10% on the first day, if you're seeing a loss, then you can just say to your dad that this is a long-term investment. I don't know. You can definitely do that. But yeah, that is it for the IPOs. Now let's move on to the market analysis for the next week. Now moving on to the market analysis for the next week, if you see Nifty over here taking support from lower levels and Bank Nifty over here also taking support from lower levels. And as I said that now is not the time where you take a selling position in the market, and I hope you guys understood that. And I also had said that markets can go into a consolidating mode, so don't even buy at higher levels, okay? And if you see Nifty also taking resistance from higher levels, Bank Nifty also taking resistance from higher levels, exactly from the levels that I had said in my daily market analysis videos. So if you are still not subscribed and are not watching my daily market analysis videos, I don't know why you're not doing that, because you're just going to benefit from them. But anyways, let's move on to how the market can move in the coming week. Now what the market can do over here is again continue to consolidate in this range over here. So now if you see, we are still at the higher side of this range, okay? Because this range in Bank Nifty is from, you can say, 50,200 roughly till 51,800, okay? So in this range itself, markets can move, and this is a pretty big range. So that means even if you take a selling position at higher levels, you have a big place on the low at to, to basically hold your positions and get profit until the markets go till this lower level. And for Nifty, however, this range is a bit more smaller, from 24,000, you can say 700. Let's take 24,700 to 25,200. Basically, this zone that I've marked over here, this is the zone where Nifty is going to move, right? So in Nifty, there is not as much place on the downside, but in Bank Nifty, if you see, definitely still until the lower end of this range, still have like 1,000 to 900 points. Let's take 800 points for that matter. So as of now, if you get the markets at higher levels, now if you see Bank Nifty has already made this negative candle, so what we will do is very simple. If you get a bit of a pullback over here on Monday near 51,400 to 51,300, over here you can go ahead and take a selling position and keep a target till 51,000. First of all, that will be a small target, and then you can easily keep a target till 50,500 at least. Don't even keep a target till 5,200, keep a target till 5,500 and book your profits. And this will be a bit of a positional trade, because maybe markets might not go till that level in one single go. So I hope you understand that. And same thing with Nifty also, in at higher levels of 25,050 to 25,080, you can go ahead and take a short position. If that level is not, if markets don't take resistance from that level, then we'll let the markets go up till 25,120 to 140. And in that range is where we'll go ahead and take a short position again till again lower levels of 25,000. First of all, that will be your first target. If you are taking at higher levels, if you are taking near 25,050 to 80, then you can hold for a bit more longer till 25,960 on the downside. And then you can also keep a positional target of 24,800 on the downside. Now as of now, when will the rally continue on the downside? Very simple. We only need a single closing below 24,750 in Nifty, and in Bank Nifty below 50,200. Okay. If we get a closing below these levels, then this rally can very well continue on the downside, and Bank Nifty can easily go down till, actually the targets are very big and I don't want to like scare you right now, but Bank Nifty can go down till 47,000 also. Basically go down and touch this, basically you, if you see this support over here, till 46,000 also, 47,000, 46,000. You get the point, right? So this level should be held if the markets have to recover or at least stay in this range. If markets break and close firmly below these levels that I said, be ready for more pain, and this pain will be much more as compared to what you've seen already. Okay, and nifty can also easily go down till 24,000 first of all, and then 23,500 also. In my opinion, if nifty breaks this level, nifty might go down till 24,000, consolidate a little bit, and eventually go down till 23,500 also. So as of now, I'm not saying that everything is over and all that stuff. Nifty will still probably be in this consolidating zone, and bank nifty can also probably be in this consolidating zone. Now at higher levels, when will we see a recovery and when will we see a confirmation is very simple. If you see in the weekly chart over here, if we want a confirmation that markets have already recovered, what we need is a very good green candle over here, something like this full candle. If you see over here, we probably need a candle like this over here. Once we get a candle like that, then we can say that yes, markets can start to recover. So for that, as of now, I wouldn't say go completely bullish. We need to wait for the markets to close this week. If we get a very bullish closing this week, then we can say okay, markets will start to recover and probably they can go ahead and touch a new all-time high. But until now, we cannot say anything as to when the markets will recover, and probably markets can consolidate over here for a week or two more. Okay, so I hope you guys understood how the markets can move in the coming weeks. So yeah guys, that was it for this week, and thank you very much for watching till the end. I hope you guys really understood something new from this podcast, and I hope you guys really liked the podcast. But yeah, as I said, that thank you very much for watching till the end. I really appreciate it. And yeah, if you need anything changed in the podcast, if you have some suggestion for the podcast, if you want something added to the podcast, if you want to listen something specifically that I've not talked about until now, if you want anything, just let me know in the comments and I will try to fulfill your wish if it is possible for me. But yeah, that was it for this week, and I will see you guys in another episode in another week. Bye bye.